One of the two bank stocks that I own in my personal dividend portfolio is JP Morgan, stock ticker JPM, currently trading at $152.82 per share. And if we jump over to my do-it-yourself investor toolkit, which you can download on my Patreon page at the link in the description, I'll blow this chart up, and if we come over here, you can see I'm currently up almost 45% on my JP Morgan position. Now, I've owned this position for a little over a year now, so if we zoom out, you can see I added when it was around $108 per share. So it was around October of 2022, and since then, it's grown around 45%. Now, in the past year alone, it's up around 15.3%, and year to date up around 13%, and trading at $152.82 puts it somewhat close to its 52-week high of around $159.38. Now, at its current price, the starting dividend yield sitting at around 2.75%, as we can see right here. And if we look at the dividend history for this company, they've actually done a very nice job of increasing their dividend payouts over the past decade. In 2013, we can see they're paying out around 30 cents per share, but jump forward to now, they're now sitting at $1.05 per share every single quarter. So if we scroll up, we can see they've increased dividends for 9 consecutive years, and if we look at those dividend growth rates, we can see the 10 and the 5-year dividend growth rates both very solid at double digits. Now, the dividend growth has slowed down a little bit over the past 3 years, currently sitting at around 4%, and keep in mind, bank stocks don't typically increase their dividends as high as other dividend growth stocks, and they're also more likely to cut their dividends during periods of economic downturn, which is exactly what happened in 2008. If we go out to the max, we can see there was some time periods where we really didn't see hardly any dividend increases from this company at all. So that is important to keep in mind when you're looking at a bank stock. Now, if we go over to the dividend safety, we can see their payout ratio sitting at a very healthy range of around 24.18%. But the question we need to answer is JP Morgan trading $152.82 a good company to consider buying? And to answer that question, we need to jump into my bank/financial institution spreadsheet, where we can look at a few different valuation models to better analyze JP Morgan. And like always, if you'd like to download any of my spreadsheets, you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in the stock ticker JPM and hit enter, and you can see all of this data will automatically load in. We've already touched on this dividend data quite a bit. We can see the 20, 50, and 200-day moving averages all up quite a bit, and this is a 750-day change chart, so it's still not at its all-time high, but it's bounced back up pretty close to its 52-week high. Analysts currently have a target price of $170 per share, institutional ownership around 72%, and a beta of 1.12, so you'll see a little more volatility than that of the market when you look at this company. Now, the first valuation we'll look at is what's known as Graham's valuation, and this is a valuation model invented by Benjamin Graham to calculate intrinsic value. The first thing we need is our earnings per share for looking for JP Morgan, sitting at 16.61. We then apply our growth rate projection for JP Morgan, which is somewhat modest but still in line with the analysts' expectations, multiply it by the average yield of AAA corporate bonds, 4.4, and then divide by Y, which is the current yield on AAA corporate bonds. And at the time of this video, it's sitting at 5.11, which is pretty high historically compared to where it's been over the past 5 to 10 years. Now, that will drive down this valuation quite a bit, but when we plug all this in, we come to an intrinsic value of $146.60, slightly below the current trading price for this company. Now, the next valuation we'll look at is actually one of my favorites when I'm looking at a financial institution, and that's the historical price to tangible book value. Basically, what we're doing is we're comparing how the market is currently valuing the company using a price to tangible book value multiple compared to where it has been historically. So what I've done is I plugged in the historical share price over the past decade and the tangible book value over the past decade, so we can see what it looks like with the historical price to tangible book value over the past decade. And I've charted it out so we can kind of see some fluctuations. The current price to tangible book value sitting at 1.89 and the average sitting at 1.8. So it looks like the market is pretty much valuing the same that it has been over the past decade, so that is something to keep in mind. Now, the next valuation we'll look at is the multiples valuation. I'll go ahead and zoom in, but basically what we're doing is we're seeing how the market is valuing this company compared to how it's valuing different companies. So we can see Bank of America, Wells Fargo, we're taking their stock price, dividing by earnings per share to get that price to earnings multiple. We take their average PE, multiply by JP Morgan's earnings per share, and we come to an intrinsic value of $147.87. So when we look at this average price to earnings of these comparable companies, 8.82, jump over to our stock screener, we can scroll down, we can see the price to earnings for JP Morgan currently sitting at 9.12. So they have a little bit of a higher price to earnings. Now, you could make the argument that it's justified that JP Morgan trades at a very slight premium compared to these comparable companies, because when we look at the ROA analysis, we can see JP Morgan currently has a significantly higher ROA for a bank stock compared to these comparable companies, which I think is one of the reasons we've seen a really nice run up in share price over the past year. Now, the last valuation we'll look at is the dividend discount model. And the idea behind this valuation is we should be able to value a company based on how much they pay out in dividends and how much that dividend is increasing over time. So what I have done is I plugged in the quarterly dividend payouts for this company over the past few years, so we can see those yearly dividend payouts and the year-over-year dividend growth rates, which is an average of around 7.15%. Moving forward, I'm projecting a dividend growth rate of 5.75%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $161.51. So when we jump over to the output tab for JP Morgan, we can see all the valuations that we use: grams at 146, multiples at 147, dividend discount model at 161, and we also looked at that current price to tangible book value, which looks like it's trading pretty much where it's been historically speaking. So we come to an intrinsic value of right at $152 when we apply all of these valuations together, which is actually pretty much right at the current trading price for this company. That's a difference of about 0.5%. So with a 10% margin of safety, you can see your acceptable buy price sitting at around $136 per share, and with a 20% margin of safety, acceptable buy price of $121.59. Now, if we jump back over to Seeking Alpha, we can see within the past year alone, there have been a couple opportunities where it's gotten close to that 20% margin of safety, but really it looks like the biggest opportunities were in 2022, where it traded as low as around $105 per share. Again, that's about when I last added shares of this company to my portfolio. So as for me right now, I don't currently plan on adding more shares of this company to my portfolio. I'm really happy with the price I bought in at, but if we do see it come down closer to that $120 price range, I definitely consider adding more. I think they have a nice starting dividend yield, a pretty good history of dividend growth with a very healthy payout ratio. So the only thing I really want to see is a better valuation from this company. But there you go. There's a quick analysis on JP Morgan. Go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. And like always, if you'd like to be able to download the spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.